Good afternoon, and welcome to this investor webinar. My name is Tarmo Karotam. I'm the fund manager, and with this webinar, I plan to share more detailed information about the intended issue of new units by private placement. The webinar is structured in a way that we'll first summarize the reasons why we are doing it, what we are aiming at, and since we have received quite a few questions and remarks, then the second half of this webinar is intended for a Q&A session where the questions have been summarized and so have been the answers to these questions. So I hope that most of the questions I can answer throughout this webinar. In case there are more questions outstanding, then you're most welcome to write them in a chat box, and then I will try to find them at the end of the presentation. So some of this information has also been presented in the previous presentations, but I will just go through it once more. The reasons for what we are doing right now. So it is also clear that we've had quite a challenging year with the expensive bond and the high vacancies last year, but we are in the process of improving our occupancies, signing new leases, and now going further. The goal is to improve the capital structure of the fund, and hereby we think we're ready for a small capital injection by our current and new investors who believe in the potential of Baltic Horizon Fund. As well, throughout the past periods, we have been aiming to manage the LTV. We continue to manage it since it is still much higher than we would prefer, and we maintain continuously a target LTV of 50%. We have aimed to refinance some of our expensive debt, and the way to achieve lower LTVs is through amortization, maybe some repayments, and that continues to be our main goal as well. So overall, what we say is that last year what we say internally is that last year we were in what we call a red zone, when we had a lot of different aspects to manage, a lot of uncertainty on the future. This year we ourselves think that we're in a kind of a yellow zone, where many of the aspects of our issues that we've had over the past 12 months have been managed. We are signing new leases. We have several other negotiations ongoing to fill up the S27 building with anchor tenants and other vacancies that we have. So we see that our portfolio, many of the properties, we have also sort of transferred into the new cycle. For example, Postimaja and the cinema building, where we have recently signed new leases, long-term leases with full occupancy, and that's the name of the game, to bring our properties that we believe in to have long-term potential into the new cycle. And that also really means our strategic office buildings with long-term tenants and are strategically centrally located assets, also Europa and Galleria. Yes, it has taken more time, but we believe that we can achieve the long-term results that we're aiming for. Currently, we're in the process of refinancing the 8 million euro bond. It's been also quite a big effort to do that, so that we have, by beginning of July, completed the redemption of the first tranche of the bond, meaning that of the 42 million uh, that was rolled over last year, we have 22 million remaining. And we continue also to look for solutions for the 22 million euro bond, which is outstanding after July. And last but not least, we know that through our negotiations with the tenants, in some cases, we um, achieve an agreement where tenant invests. In some cases, we also need to contribute as a landlord. And going forward, we need to be ready for additional capex investments as well. So these are all the reasons why we are currently planning these activities. So we do see that we can maintain a goal of achieving at least 90% occupancy by this year, and the goal for next year is 95%. So it is something in more detail. We think that the effective solution to stabilize the fund further is threefold, and is to dispose of non-strategic assets that we have in the portfolio of a size of approximately 10 million, then refinance some of our more expensive loans and extract a bit more financial sort of liquidity through this process of up to 5 million, and then get a capital injection from the current new investors of approximately up to 10 million. That really depends on the market price. It can be as well a bit lower. And as we have noted, internally, we believe in the future of the fund, and as well the management team is planning to support the fund and also invest fresh equity into the fund in this process. So once again, why we are doing this is to feel that we are in a green zone, that we can welcome tenants, we can manage our debt, and through that become again the dividend payer during 2025. So just a bit more than the reasons why currently we are planning a private placement and the public offering. So since Baltic Horizon was listed in 2016, we have had approximately, I think, 10 issues, different kinds, both private placements, both public offerings, and at different price levels. So we're following a prospectus directive, we're following the regulations and the guidelines in order to do these things. Now, the main difference between a private placement and a public offering is the efficiency. And what private placement really is that it is targeting a more limited number of investors, usually with higher tickets. They can be current investors, they can be new investors, and it can also target up to 149 retail investors per EU country. So let's say EU country in which is Estonia, Latvia, or Lithuania. In this context, and that doesn't include this number doesn't include institutional investors such as banks or pension funds. Now, public offering is a much more wider offering, and it's a longer process. And what is also different is usually the amounts that these offerings are targeting, and giving a very limited amount of new capital that we are aiming to raise in this process up to 10 million, then we don't see the efficiency in going through a public offering process, which in addition will require a much more larger undertaking with a full prospectus and usually in several languages, engaging also a wide variety of investment banks and auditors with all the costs associated. So structurally, a private placement is a much standardized, simpler procedure that ensures much more cost-effective and Swiss process. So our experience, also in terms of cost and timeline, is also shown in this table between 10 to 20,000 euros for private placement, mainly legal fees, but when it comes to a public offering, the cost can be up to 200,000 or even more, depending on what are the fees with investment banks and the auditors. So again, this is nothing sort of that we haven't done before, and I understand there are a lot of questions from the investor base. So what to do, and I hope it is understandable why we're doing this currently, or why we are asking, actually, to be more precise, why we are asking investors consent to be able to do this throughout the remainder of 2024. So in regards to some of the questions then, and we have summarized here some of these questions and offered answers that we believe or should be quite comprehensive to read and understand. So some of these answers can be a bit repetitive, but I will try to go through this in the next few slides. So there has been a question of why is the capital raise needed, and once again, we are taking several measures in order to further stabilize the fund. One is potentially selling a non-strategic property. One is refinancing some of our debt, amortizing our loans, and the third avenue that we have to improve the stability of the fund is a capital injection. So that will allow us to invest into our properties, to welcome new tenants in case needed, and lower the vacancy of the portfolio. And at the same time, it's been quite an effort that we are in a process to repay the 8 million euro bond with additional refinancing and the cash that the fund currently has. So once again, the name of the game is to increase income and reduce the cost of debt, and the process has been ongoing and will be ongoing also for the coming quarters, coming periods in the future. Why are we planning a private placement and not the public one? So private placements are cost efficient in nature. Usually preferred to be offered to institutional or larger investors with higher commitments, and we do need to follow strict rules which are applicable to this, and that our legal team is monitoring and preparing. Here I can also say that if investors are interested in the offering, we can take note of this, and some investors have reached out to us. So if an investor is interested, then we can consider the offering including these investors in the offering. And last but not least, if investors are interested and believe in the future of Baltic Horizon Fund and the recovery of the unit price and the results, then investors can defend their position also by simply acquiring up to 20% of additional fund units from Nasdaq Tallinn or Nasdaq Stockholm from selling investors. I've also made this note before, but there are still has been quite a few Swedish investors that are selling, or Swedish background investors, and we have noticed quite a few Baltic investors actually on the buy side. And furthermore, the 90-day average is a longer term average, and it can be noted that if one is interested, then a partial increase in units can also be obtained from buying in a market and even at cheaper prices than the 90-day average unit price calculation could be in the future. So there's been a question, so why still are you planning the private placement? Because the unit price is low and has a high discount to the NAV. So it is true that the unit price is at the low end and much lower than what we believe the true value of the portfolio, could be when the various issues regarding the occupancy and the bond will be resolved. But and again, we're not able to control the market price, and the 90-day average pricing mechanism has been something that we've also done before, and that some of our largest investors are accustomed to. So it does even out, and it does remove some of the let's say inefficiencies or big fluctuations. So in that sense, it's quite the average is quite a normal way how to complete these offerings. And we believe that having done what we've already been achieved or what we've already achieved over the past 12 months, then taking action now is ultimately the right thing to do, and in order to help to improve the operational results of the fund and work on the recovery of the unit price in the future. So the question, who will be invited to participate in the private placement? So again, private placement is targeting investors known to us with larger tickets, usually professional and institutional investors, but the offering can also be extended, and it can be targeted up to 149 retail investors per EU member country. The question has been, are the management board members or representatives of the management planning to acquire units? And several Northern Horizon team members are interested in supporting the fund with additional equity to improve the liquidity. And we think that, or we believe by estimate that approximately half of or up to a half of the commitments will come from current anchor investors and the team members. So we want this offering to be a success, and hopefully we can achieve as well to have interested investors to defend their positions in these ways which are possible for them. The question has been that why is private placement in the interest of smaller investors? And again, we believe if we improve the capital structure of the fund, that will give more confidence to the market that the recovery will continue, and and we are working on three avenues: disposing an asset, refinancing our debt, and with new equity. So again, the aim is to become a dividend payer in 2025 with these achievements, also on the income side of the fund. It is also the case that investors who don't want to defend their position, then and they will be diluted to a certain extent. But again, we have limited this offering to up to 20%, so we don't know if it's going to be between 10 or 20 of new units today offered, in case we receive, of course, the mandate from the investor base in the next upcoming investor meetings. So then this is also the case. And also because the market price is so low, we are not planning to, go into large capital raising and to threaten or to go through this large long-term process, and so that the dilution could be much larger than up to 20%, which currently could be the case for investors who are not interested in investing with us going further. As said before, smaller investors can defend their position by simply buying from the market, and even possibly at cheaper levels when compared to the 90-day potential average. But as mentioned before, investors that we're targeting are usually known investors to us, and the offering itself can also be extended to up to 149 retail investors per EU member country, and that comes from the regulations which are related to the private placement. So, there's been a question that does all of this affect the unit price? So we don't, control the unit price, so we don't really know how it is affected short term. So it could be that some investors would not like to join this new offering or buy units from the market. So and they would sell, but there could be as well that investors that are interested in buying at a cheaper level to maintain their percentage in the fund, in the total units pool, or maybe even increase it. But as said before, the capital injection is one of the tools which will help us to improve the financial standing of the fund, and for the team to feel much more comfortable that we can do what we are have been planning to do, in terms of increasing the NOI of the fund. When tenants are moving in and when new tenants are being signed up to move into the vacancies. So there's still quite a bit of work for that to be done, but that's the goal of the fund team, and we can then plan our activities also more precisely. So we do believe that with the activities that we're doing right now, it should improve the operating results of the fund, and hopefully that should also then be reflected in the unit price, which is currently, as you all know, at a very low level. So what if I've had several questions at what can I do as an investor to maintain the holding that I have, then we do recommend that in case an investor believes in the fund, then there is an opportunity, very flexible opportunity to buy up to 20% of additional units from the market, and we have also the ability to target up to again 149 retail investors. So we hope that this will accommodate all the needs of the investor base going forward. What will happen if the shareholders vote against the private placement? So in case the management team continues to work on the other two avenues that we have, disposing an asset, still in a quite challenging market when it comes to potential transactions at good prices, and then refinance the expensive debt that we currently have, and mainly through cooperation with the banks and cooperation with the bondholders. There's also been a question that why do we just not close down the fund? We've definitely considered it, and we've discussed it extensively. But again, we already end of last year, decided that with a lot of hard work and good cooperation with the partners, with the investors, we believe that there is a future for Baltic Horizon. There is a full goal to become a dividend payer again, and also having received some offers for our properties, and we do see that it is not really prudent to accept these prices at this period of time, as very limited amount of value can be then extracted from this process, which can be as well costly and lengthy in nature. And what gives us much courage and much sort of confidence for the future are these tenants that we have been signing up. We've made them many times, the new anchors for our properties, the police, Apollo Group now in Meraki, Narbutas, and several others. And the current negotiations what are ongoing with the tenant in our vacant properties. Yes, it will take a bit of time, but we do see as well that the markets are turning, and hopefully, so Euribor will continue to decrease. That should improve as well our tenant situation, consumer spending numbers as well, um, eventually the valuations and also the potential price that we could receive for any of our assets that we would like to sell. The fund is currently not in liquidation mode. It's not planning to exit in any way. So hereby we are in the process of working on these three avenues, increasing the NOI through new tenants, decreasing cost of debt, amortizing the debt, um, and if investors believe in it, then have the mandate to increase the capital base and get also a fresh equity capital, limited fresh equity capital injection into the fund. So this concludes the presentation that I have prepared. Let me see if I can take if there are some other additional questions with some questions that I haven't answered already. There's a question of the management team and how many shares the Baltic Horizon we own in Baltic Horizon Fund. So I can say that the number is in hundreds of thousands. The number is more than 500,000. Um, and also the question is that who you know mm, haven't checked the latest let's say report, but I would say today is definitely more than 500,000, closer to, I would say, even to 800,000. So around, I think shy of 1 million. So um, I think that's an answer I can give at this moment. So the question is that why don't we sell more of our properties instead of doing this capital increase? So I would say that once more, we believe that with some of the work that we are doing, we can, within 12 months time, we can improve the value of many of our properties, and this is not the time to sell. Also, one needs to keep in mind of the bank debt that we have, and some of the let's say offers that we have received are somewhat higher than the bank debt, but not a lot. So that will also not solve our problem to let's say increase the financial liquidity or strengthen the financial position of the fund. So we're still considering selling some smaller non-strategic assets, uh, but it's also a question of if you start selling larger assets, that then it could signal or even the larger potential liquidation of the fund, which we don't believe that we want. It's in the best interest of the investor base as a whole. So we believe in the future of Baltic Horizon, and we believe that it should remain listed. It should become a dividend payer again. There's a question on the LTV that that currently we are quite at the high level, and our target is 50% or below. And why are we then thinking of potentially paying dividends next year, whereas we could deleverage the fund further? I think that's a very good question. The thing is, we it's a balancing act, I would say, and the question is, how much, and in which period of time do we believe that achieving, let's say, 45% or 40% LTV is the best course of action. It yeah, and we do know that our investor base is expecting a dividend. It could be a small dividend. So it's or a bit larger. So eventually it will be a balancing act. It depends on so many factors. It depends on the valuations. It depends on the cost of debt and so forth. So as we said, we that's our aim, is to become a dividend payer in 2025. If our plan works out and if we are able to achieve, if the market supports it, and but we do see that it could be possible, yes. I would say that in terms of LTV, so our main goal is of course 50%, but that we want to achieve no matter what. Question is, would you go down to 45, or would you go down to 43 or 47? So that's something then to be decided. And again, it depends on so many factors, and then it depends also on a timeline, and that needs to be balanced out. So there's been a question that are we in the market to potentially buy new objects? So we are a market player, so of course we keep an eye, and in case something very attractive comes along, potentially we could build a case for it, but it's definitely not our priority. It's something that we have to be we keep our eye on the market. But sometimes, a few times I have said during these webinars that we do look into a longer term future than just 12 months, and potentially we need to have also a 3 or a 5 year view on where we want to be, and let's say in today's market, where buyers and sellers are still quite far away from each other, it will take time, for the new equilibrium to find itself, and potentially then we'll be also in a better position to consider different investments. But currently the priority is to stabilize the fund, and through these 3 avenues that I've discussed before. So there's been a question on that we have acquired our strategic assets at high prices in the past, for example, Postimaja and Galerija Centrs. So yeah, high prices is let's say a relative term, and I think around 3,000 euros per square meter. The central locations cannot be considered too much of a high price, also considering the replacement costs today. One has to look into more specifics here, and for example, in Galerija Centrs, is of course our major disappointment that Riga Old Town and Riga itself has been affected by COVID and other things very directly. Lack of tourists, no Russians spending money again, and the property itself has been in a process of realigning its let's say visitor base, and it's of course very disappointing that it has taken so long, and it will still take time. Um, but um, yeah, and now we're almost in 2025, almost 5 years after we acquired the property, and it has been recovering much slower than anticipated. But again, if we look at in a longer term perspective, and we look at it from the point of view that when the property will be occupied by tenants such as MyFitness, Arket, the food hall, some of the other, anchors that we're planning to bring in for a period of, 10 plus years, then that's where we get our sort of motivation and excitement. Yes, it will take time. Yes, it will take some investments, but we still don't believe that Riga Old Town will remain in this current situation, or it has been already slightly improving, but not visibly. But um, but we believe that the value will be restored. But yes, it will take a bit of time. At the same time, when you put together a portfolio of 300-400 million in the Baltic states, you are, as a fund management team, buying throughout the cycle. And yes, some investments you can make cheaper, some investments a bit more expensive, but the idea is to believe in what you can own long term. We're not a developer. We're not buying, holding for 1-2 years and selling. So that's something that is not part of our core strategy. So the strategy is to be a very long-term holder of certain properties, and to maintain them, to uplift them at certain periods, and then bring them to the next cycle, and throughout then a period of economic growth, and improvement of people's disposable incomes. Also believe in the indexation of rents, and in the increase of rental prices in the coming years, when Euribor starts to stabilize, and other, let's say, major events in the region um, find their, um, let's say, new solution. So as we have said, in the private placement, we are targeting mainly, known investors, larger, and larger tickets. However, we can target as well, 100 up to 149 retail investors. So we try to accommodate their wish as well, in case they really want to participate in the offering, uh, at the price which could be, even larger or higher than they could acquire in the market. Then we are, processing the requests, and are able then to contact these investors if they show interest, in the due time, when we actually do receive the mandate. So the question, I guess, is that has the management been buying in the market in the previous periods? And the answer is yes. So but we also plan to, support the fund with new fresh equity, um, as much as we can. And So it's a question again on the 90-day average pricing, and this is something that is a market standard. You can argue, is it low, or can it be done higher, or should we even give more discount to some investors that could come in with bigger tickets. So we haven't done anything specific like that. So it is up for the investors to decide, really. If the investors believe that 90 day average is not the right one, then we will see what would be the right one. So this is something that has currently put on a vote. So I don't know how to comment more on this. So there's been a question that, is the NAV at the right place? So NAV, as you know, in our case and in many cases, is based on the financial mm, results of the fund, and also being quite a bit affected by the external valuators. So we've had Colliers as our valuator, we have had Newsec as our valuator. Now, we have also received non-solicited offers, as I mentioned, throughout these periods for our properties. So, but this is something where we will not sell, and we believe that's not the market price. And what the evaluators are doing is trying to understand through their methodology, what could be the potential market price where buyers and sellers meet. So if we get an offer for our property, that doesn't mean that we need to, book this offer and reduce our NAV. So that's not the case. So NAV is calculated by or affected by the valuations, and it's also not an easy job for the valuators to reflect the market price. In many cases, we have also argued with the evaluators that we have actually received higher offers, for the properties, and that the NAV should be adjusted upwards. But there's various arguments and discussions around that. So in both sides. So we believe that the NAV is trying to reflect what would be where the market is, meaning that where buyers and sellers can meet today, considering the different properties that we have. So there's a question on um, what alternatives have we considered for this private placement. So I can answer this, that private placement to this limited amount is part of the effective solution, what we call. So it also entails refinancing some of our loans, some of our also the bond, and disposing a non-strategic asset. So you know I guess alternative could be that we just do a big public offering, and at this current low market price, and the danger of, let's say, diluting other investors who are not participating is it's much higher than up to 20%. So we don't believe that this is also right. So it is. We see that the combination is probably the best effective solution here. And as we're fully aware of the potential dilution for the investors who are not willing to participate in this, or defending their position in um, in buying more units from the market. There's a question on S27 building, and So the answer there is that we are in discussions with an anchor tenant, and there's been several visits throughout the past, I think, 6 months, and we aim to announce positive news shortly. Once more, maybe this is a question on the NAV. So the valuations are affecting the NAV, and and due to the bond, the cost of I think the debt on average is higher than all of us would like it to be. Um, so the evaluators are using in their method, in a WACC method, cost of debt, long-term cost of debt, and long-term cost of equity that can be obtained on the market. So I believe our valuation should be all correct. Um, so there's been a question here to when improving the capital structure, and so that are we able to do it organically? So yes, we have been doing it organically as much as we have been able to. But this small injection, what we believe is of new equity, will really bring us to the comfort zone, if you want to put it that way. So to really have a strong position for any, and hopefully there will be no negative surprises, but you never know. So that's what we really want to do with um, this activity. And there's a question on the net lease area of Postimaja and Coca-Cola Plaza. So this mainly relates, and there's been a decrease in the net leasable area. So that is related to the new leases that we have signed. So they are structured a bit differently. The price is also actually higher. So let's say it's because of certain areas are not considered net leasable area anymore. Um, uh, so um, so that's the reason for it. Uh, there is a long question here about again the pricing mechanism of the private placement. So you know it is the case that investors were interested in the future of Baltic Horizon, and supporting the fund, and see the potential. Then there is a possibility to um, you know approach us with a request um, to participate, or buy from the market to keep the ownership at even cheaper prices than the market 90-day average. So this is something which is the case, and if the general meeting of investors approves it, then I think the overall uh, sort of consensus is known for the management, and we're following the prospectus directive and legal advice in our activities going forward. So again, this is nothing new to us. We've done it uh, in several cases also in the past. We've done private placements, we've done public offerings, and I think I've explained quite thoroughly um, the reason why we're doing a private placement right now, or planning to do. So I think there's a last question. I'm trying to see what angle is this asked from. So I think from my position, this offering is really to for for investors, um, to help the management and the fund uh, to stabilize its business. So we've paid back almost half of the expensive bond. We continue also to find solutions for the remainder of the bond. Of course, we continue to refinance our properties at the best possible levels and sign up new tenants, minimize the capex investments, and bring the fund, uh, to a more stabilized position over the next period. So I don't see that we are in this private placement, we are selling or hypothetically even selling any of our properties. So most of properties we definitely want to keep long term. We see a lot of value can be still extracted. We don't believe that it is time to sell the properties, and as mentioned before, mm, um, we do recommend and propose to investors, if we get the mandate, to consider private placement in the periods that are coming, then to also consider defending their positions so that they will not be diluted. Again, we've tried to keep this process and also the potential dilution to a minimum, because and also we believe that the unit price potentially could increase much more than even the theoretical, or practical dilution effect, if we stabilize the fund and have much stronger liquidity position to go through um, the next 6 to 12 months, when many of our tenants are moving in, and it is a low income period currently, and but again, the name of the game is to increase the income, sign up further new tenants, and decrease the cost of debt, and have the strong liquidity position to do that. Well, I think one more question. So it was a question about when we're refinancing our bond, which was in the period of beginning of 2023, and when capital markets were not working, Euribor was increasing, so pretty much the worst time to do it. We were considering as well, refinancing it through big public offering, with all the press coverage, all the rest, the difficult environment I think the only reason we didn't do it because the amount was quite large. So 42 million was quite a large amount, and there was no way we could, like, let's say, decide that okay, we will only do 40 or we will only do 35.2. So it was a full amount, and we found, let's say, a solution that we could find at that moment. Yes, probably today you would be able to refinance or let's say get the bond out at cheaper total cost. I think there's market players who have also done that, even though at much smaller levels. So I think my comment on the bond is that, final comment maybe is that we have paid back already almost half of it, and by 8th of July we hope to confirm it. And we continue to search a solution for the remainder of the bond, and that remains on our desk as well, of something that we need to resolve during the journey ahead. So thank you very much for the questions. Hopefully this was informative, and happy to answer any questions over email in case there are some. So once again, welcome you to participate in the general meeting. Maybe just a small comment that regularly we for these cases, according to the fund rules, we this needs to be discussed in two general meetings, and in the first one, the quorum requirement is probably higher, or historically has been higher than the investors participating in the voting. The voting process as well is quite preparation for it is quite technical. Documents need to be presented, power of attorneys or extracts of some registries, and so it's quite a cumbersome process. So most likely this will be discussed and decided on in two meetings, and I think the first meeting we will not have a quorum potentially in place. So the question is that what can we decide there, and if we cannot decide anything there, then it will be put on the vote in the second meeting later on during this summer. Thank you once more, and all the best. Keep in touch.